Good morning, my name is Adriano Donati and I am the Head of Investor Relations here at Unipol and UnipolSai. I am going to take you through our first quarter results today, so let's start with the current group structure. The sale of Unipol Bank has of course been agreed, and just to remind you, following the recent streamlining, the perimeter of the insurance business at Unipol is identical to that of UnipolSai, so we now present a single set of insurance-related figures. At Unipol, on a normalized basis, the consolidated net result shows growth, standing at 171 million euros. In terms of business lines, non-life profit grew considerably, while life business saw a decrease offset by a marked improvement in the holding and other segment, due in large part to the absence of any write-downs on the real estate portfolio. There is no contribution from Unipol Bank as the business has been reclassified as a discontinued operation. The net consolidated result also grew at UnipolSai, again on a normalized basis, rising to 184 million euros. A similar trend to Unipol is evident for the individual business segments. Total non-life premiums increased 3.3% to 2 billion euros. I remind you that following the recent streamlining operations, the level of premiums at Unipol and UnipolSai is identical. Motor premiums increased 1.5% year-on-year, while non-motor showed particularly strong growth of 5.4%. The performance of Incontra, our bancassurance agreement with UniCredit, was particularly noticeable, with premiums more than doubling compared to this time last year. The combined ratio after reinsurance stands at an 84.6%, an improvement of half a percentage point on last year, mainly thanks to an improved loss ratio. The combined ratio of direct business showed a similar trend, standing at 93.4%. On the life side, total premiums grew 5.7% to 1.3 billion euros. Arca Vita continues to grow at a strong rate, 16% year-on-year. Traditional products continue to make up the majority of the portfolio. As you can see in the lower half of the slide, good profitability is still evident, with the gap between average yield and minimum guaranteed on segregated accounts increasing by 10 basis points on full year 2018 to 2.01%. As you can see from the breakdown of technical reserves, given that the majority of new products are sold with a minimum guaranteed yield of 0%, the guaranteed yield across the back book is steadily decreasing. In terms of asset allocation, at Unipol bonds represent 84% of the portfolio, with Italian government bonds representing almost 50% of the total portfolio. Total investments are 55.4 billion euros. In terms of financial yields, the running yield remains solid at 3%. On top of this, a strong contribution from realized and unrealized gains led to a total yield of 3.9%. The total value of the real estate portfolio stands at 4 billion euros, with 26 million of sales made during the first quarter from 41 transactions, and no impact from write-downs. Turning to the NPE business, Unipol Rec reduced its gross loans by 78 million euros over the quarter, with collections of 24 million, maintaining a recovery rate of 31%. 473 million euros of the net bad loans remain, covered at 81%. In terms of solvency, the ratios at both Unipol and UnipolSai remain solid. The ratio for Unipol using a partial internal model is 1.55 times. The UnipolSai consolidated ratio on economic capital basis is 2.16 times, while the ratio for UnipolSai solo, using a partial internal model, is 2.41 times. So, in conclusion, a solid set of results to start the year. I remind you that the senior management team will present Unipol and UnipolSai's new strategic plan 2019 to 2021 today at 10:15 a.m. CET, which you can also follow via webcast and conference call. That brings me to the end of my presentation. Thank you for listening.